Okay, it's going to be a telling 48 hours as we lead up to the GDP latest snapshot out of the United States. This week has been marked by more evidence that recovery, if we indeed we are in the midst of a recovery, at least stateside, is very wobbly at best. New home sales rate annualized coming in 276,000, slowest on record in July. The durables report, as Adam and Marty were talking about, nothing to write home about. And of course, earlier, a veritable collapse in the existing home sales, just showing that if the government ain't stimulating, people ain't buying. Johanna Chua, chief economist, Asia Pac at Citi, joins us here on Squawk Box on this Thursday. Good morning.
Hi, good morning.
America is falling apart. Oh dear. What do we do?
Well, I mean, definitely things look worse than expected, and therefore, if anything, I think market is probably going to expect that the Fed's probably not going to do anything anytime soon in terms of, we're probably going to keep interest rates low for a long period of time. I think the key thing people are watching for is whether, what's next? If things get really bad, is Bernanke going to do anything more at this point? And definitely the odds are rising that something will happen, but I think we still need to see further evidence of a much sharper deteroration from here going forward.
There's obviously no onus or catalyst for the Fed to kind of pull the gun out at this point. This is one of the reasons that we've been debating, and the Japanese are now doing so much soul searching over where the heck the yen is going, and we're seeing all kinds of analysis on corporate profitability or non-profitability impact as a result of the uncomfortable level where the yen is. How do you put all this math together?
No, I mean, definitely, even in the case of Japan, I mean, we've got an issue here where, given the strengthening of the yen and given the importance of exports in their economy, a lot of people are expecting that they will do something. Now, clearly, market was a little bit disappointed that, on August 23rd, nothing concrete really happened. And there's a lot of expectation that there could be an emergency meeting sometime before the next monetary policy meeting on September 6th and September 7th, where BOJ might do something. And, we've seen some news about further liquidity injection, liquidity provision, more term funding, and there's also been talk about a supplementary budget. But having said that, given the fiscal constraints of Japan, I don't think they really can do that much fiscal stimulus at this point. So all eyes really are on what they do in terms of BOJ and perhaps more intervention on the currency. But it doesn't seem like it's happening very, very soon. I guess we're still waiting for more concrete action. So far, not much.
Does this state of flux that we're in, or this state of suspended animation, in many cases, does that prolong the argument about, how much latent inflation is, boiling beneath the surface? I mean, the debate goes on. You've got your hawks on one side, you've got your, complete doves on the other side, with really no clear consensus down the middle.
Well, I think in this environment, more or less, the doves are starting to gain ground. I mean, clearly because of the slack in the economy.
So you think that it's a D word is more critical than the I word, then, the deflation?
Well, I mean, not in Asia, not in emerging Asia, but certainly in the advanced industrialized world. I mean, I don't think we worry too much anymore about inflation as we used to. I mean, early this month, a lot of people were talking about wheat prices. I mean, people were talking about what was happening in Russia and concerns about food. But given the global backdrop, I think, and how that's impacted commodity prices, some of those fears seem to have somewhat dissipated a little bit, given growth concerns. So I think right now, although in Asia we don't see the D word, at least in emerging Asia, we don't see the D word at all. At least, all the overheating concerns are also kind of gone as well.
Right.
So I think we're kind of in this nice Goldilocks scenario where, not too hot, not too cold. Central banks, some of them still have to normalize policy rates a little bit because rates are very, very low, but they don't have to do anything very drastic. And in fact, we've actually changed a lot of our rate hike calls going into 2011 because we don't expect the Fed to hike interest rates at all anymore in 2011. So, and that has some implications.
So you think Mama Bear is kind of holding up the house right now? Papa Bear's hibernating?
Yes, exactly. And we're not yet things are not that bad yet that we're at Baby Bear. Well, definitely not in Asia. I mean, I think all eyes are really looking at what's happening in advanced industrialized world, especially the U.S.
Johanna, finally, for the tens, if not hundreds of millions of people out there who are latching their fortunes onto your every word this morning, what is the most actionable bit of intelligence that you can share with us as we wrap out the week? How can people really protect their future and the future of their children?
Well, we're still, I hate to say this, and it's almost like we're still in a somewhat bond-friendly environment in the near term. Absolutely. And therefore, a lot of people talk about a bond bubble, right? And whether we're in a bond bubble. But the truth of the matter is we're in an environment where, Treasury yields continue to stay very, very low, and people just want to protect their capital. They're not sort of gunning for huge capital appreciation, and with a lot of growth concerns, that clearly has some issues. So I think still still looking for value in bonds, looking for higher yielding bonds that have kind of lagged. We've seen very, very strong performance on sovereign debt, but perhaps, there's been a bit of dislocation between sovereign and some of the higher quality corporates. So there's opportunities there to sort of, put your position, put your money safe for now until we get more confidence about exactly how the growth picture looks like globally. Because right now things are still a little bit uncertain in the meantime.
Johanna, have a beautiful Thursday.
Okay, thank you.
And the rest of the week. Buy bonds, says Johanna from Citi. Martin, back to you.